Welcome to the Nebraska Soybean Board Weekly Market Roundup. I'm Bryce Duskin. It's been a wild week across the markets. Feeder cattle hit new highs, wheat rebounds off the lows, and outside money starting to flow again thanks to an upbeat jobs data reports, and some easing trade tensions talk. We're going to be diving into all sorts of topics, not only on the grain front, but also in livestock, as two veteran commodity analysts are standing by, ready to join us, give us their thoughts on what they saw over the past week right here on the Weekly Market Roundup. But first, let's get a word from our sponsor.
It may be small, but this little bean fuels a lot of power. It powers a food industry as a top source of protein. It's a fuel that powers diesel engines with fewer emissions. It powers a state economy and bottom lines. And it powers the rest of the world as a top Nebraska export. Yeah, it may be small, but we're finding more ways for this little bean to power Nebraska.
Welcome back to the Weekly Market Roundup, brought to you by the Nebraska Soybean Board. We say thank you to them and all the soybean farmers in Nebraska supporting this program through their checkoff. Well, as I promised, two veteran commodity analysts standing by to join us. Jeff Peterson, Heartland Farm Partners, is here. In particular, he'll be talking about the grain market. And the man who's in the know on the livestock side of things, Kyle Bumsted, who trades with Allendale. Good day to you both. Thank you for your time. Jeff, let's start with you. What did you think of the corn and soybean markets over the past 5 days?
Overall, I felt pretty good about it, even though we're, kind of mixed today. We've got, old crop corn down, we've got new crop up, but beans are stronger, which is good. We ended up having an interesting week. We're still going to end up probably closing lower for the week on corn and beans, but it was good to find some support. And as we dig in and look at it, it really feels like we came down and found some good technical support, especially on the corn side. As we got down that 469 area, that's an area we're down that same area on April 30th, and then we found support there going back from highs on April 3rd and 4th. So that's a good support area. Over on the soybean side, if we look at that, soybeans came down yesterday and found some good support in that 1036 area and have rebounded nicely here today. And overall, it really does seem like from the tariff talk side, we're getting some more positive news that's moving forward. So overall, I feel pretty good, Bryce.
Jeff, a follow-up to you. I believe this program serves as a good avenue for everyone who's in the know when it comes to the markets, but also just kind of a casual observer. You were talking about technical support. What do you mean exactly when you reference that?
Yeah, so that's a great question. So, when we look at the technical support, we're looking at the charts. And in particular, what we're looking at is two things there. That could be an area where the market had traded down to before and ended up finding buying showing up. Or it also can be an area where, let's say we had a high before where the market traded up to, but then we were able to physically break that later. That can also be an area where buying shows up. So overall, it's generally an area where you've got good buying stepping in into the marketplace.
All right. Appreciate your thoughts on that front. Kyle, let's bring you into the conversation. Again, Kyle Bumsted. Stop me if you heard this before, but another record week, in particular for fat cattle here on a Friday.
That's right. Record week in both the futures and the cash side of things, both feeders and fats. So we came into the week, everyone was anticipating higher cash, and obviously we got it. We trade a lot of 218 in the Southern Plains, a lot of 223 here in the North. Dress trade is around that 350. I've heard some pricing show this next week as high as 355 to 357 already. Question is, will they get it? We're sitting here. It's interesting as we close out the week. We've seen a lot of spread activity this week. And when you throw a month end into the middle of a week, it can really muddy the waters a little bit when we start looking at spreads and we start looking at volume and we start looking at open interest and things like that, because we see a lot of end of month positioning and things like that. So when we see the commitments traders report here this afternoon here on Friday, I'm looking for them to be buyers in both live and feeder cattle, and to a lesser extent, possibly the hogs as well too, based on the action that they've had here from Tuesday to Tuesday. But going into next week, it looks like we're going to be strong as long as this box beef market can hold together. I mean, we've seen some economic data that's been two-sided here. We've seen some good economic data from the consumer, and we've seen some not so good economic data. So the question is, with the box rising as high as it is, how long can the consumer continue to pay these prices?
Okay, follow up to that. You talk about some supportive data out there. What in particular do you think influences things like the cattle market that's not directly in the ag commodities, Kyle?
Well, I think you have to look at consumer credit, you have to look at consumer spending, and you have to look at jobless claims and things like that. Are people working? If people working, they've got to eat, and if they're not working, they're going to go for cheaper cuts or change altogether. So I think that as we move forward, I think we need to keep watching here as far as interest rate cuts and things like that. Inflation, deflation, those are a couple big hot topics that we're going to see as well too moving forward here that could affect this thing non-ag related, I guess.
Okay, Kyle, I'm going to stick with you for my next question, kind of going back to the grain complex. Seems like soybeans rallied here a little bit on Friday out of news that China and the U.S. were saying that, yes, we will talk to each other when it comes to this potential, or what, I guess, call it what you want, whether we're in a trade war now or on the cusp of one. You warned us early on, I think, as part of our daily updates with you, Kyle, not to follow the headlines so closely this time around. We've been through the first Trump administration where we had similar action. You're warning us, don't, maybe warning traders, don't have knee-jerk reaction. Do you see this latest conversation being knee-jerk, or do you think there's some truth to what could be happening?
Well, it's kind of the same horse, different race. You don't really want to run the same race with a different, or same horse, same race. You kind of want to look at it maybe from a different perspective, because like I said, most of the traders have been through it before. We went through 2016, 17, 18, 2019, and 2020 in that area. I mean, we saw that this was all coming to fruition then, and we saw these headlines back and forth. We saw the bigger swings then. But to go off of what Jeff said, the technical picture here, we got up to an area here on Friday of July soybeans here, right around that 1060, 1061 area, where we're seeing a longer-term downtrend come into play. So I'd like to see us close above that downtrend line there when we look at it in order to get some more upside in this market. I think that there is some good news out there for soybeans based off the domestic crush and things like that. But, we're always susceptible to those tariff headlines and talks with China. Are we talking with China? Are we not talking with China? And on the flip side of that, corn with Mexico.
Mm-hmm. Good points. Jeff, similar question to you. How should we be looking at these trade discussions, the discussion around tariffs? And I guess if we do reach an agreement with China, how much upside potential in particular for soybeans do you think is out there?
So let's just take a look at what we have to do. And I agree exactly with what Kyle's talking about. You got to be careful about looking at the headlines. I think you have to look at more what's happening more than what's actually being said. And so if you dig in and look at that, starting first on China's side, what you'll notice is that they went ahead, and it's kind of pretty textbook. They wanted to make it feel like there's other countries out there that feel like, maybe the U.S. is unfairly pushing on these tariffs. So in their BRICS meeting with their foreign ministers, they tried to get a consensus to say, hey, you know what, this isn't right. They were not able to get that among the BRICS members, which that is their most closest of trading allies. In addition to that, what you'll notice is that of the tariffs that are going in, or products going into China, which there should be a 125% tariff. Right now, there's about 25, some would say as high as 30% of those items going in that actually does not have a tariff applied to it. And that's just strategic goods that they're bringing in that they really need, that they're not putting a tariff. Now, they're even going a step farther. China's going a step further with that, and they're even rebating back some of the tariffs that would have taken on products going all the way back to the time in which they started. What we have to remember is that ultimately we ended with a phase one trade deal with China last time. But in order to get to that, it did take 9 meetings between delegations between the U.S. and also China traveling back and forth. And it also took 2 meetings between our presidents to get to that point. So we're just on the very front end of this. And actually, I feel pretty good about the progress that's getting made. We're now getting to the first step in here where we're starting to talk about talking and bringing teams together, which that's very positive. The other thing I would say about this, though, is that as we've got a number of different countries involved this time, the reciprocal tariffs took place over 180 different countries. We've got about 130 of those that have expressed interest in negotiation. There's about 18 formal deals going on, probably some would say between 7, could be as much as 9 different formal negotiations. And in addition to that, it looks like we may have a successful one completed. We don't know. Their prime minister and their parliament has to physically approve that. So there's actually some pretty positive items. Now, your follow-up question to that, Bryce, was what kind of a bounce could we have in the market? Kyle identified a really good downtrend line in there that is resistance, but I think we've got some good upside in here. Could it be 25? Could it be 30 cents? Could it take us all the way back to, where some of our previous highs were back in February as we got up in that upper 1080, 1090 area as we're looking at the July chart? I don't think you can leave that out. if we have something promising from China. But it's going to take a little time yet with China. This is going to take a little time to play out.
Some in-depth thoughts there, Jeff. Really appreciate that. Kyle, let's go back to the livestock front as we kind of start to round out our conversation. You think there's some more upward potential as we turn to next week's live and feeder cattle market?
I think there is, Bryce, when you look at it. This week we traded a lot of 8-weight cattle in that 305 plus area, and that's really been pushing this feeder index higher. And here on Friday, we made new contract highs here in this August feeder contract around that 297.97, where everybody's saying we're going to hit $3. We're right on the precipice of it. We're either going to hit it and blow right through it and go to 303 to 310 up in that area, or we're going to do what corn does so many times, and everybody wants to sell $5. You stop at $4.99 3/4. We might stop at $2.99 or something like that, and that might be close enough to $3. I'm also looking at later on this month here in May the amount of Wheaties, the wheat cattle that have to come to town. There's some big ones, and they're awful pudgy, and I'm kind of concerned about the amount of cattle there that have to come to town there.
Okay, Jeff. Before we go, any changes to the marketing plan as you evaluate the markets over the past week?
The only thing I'd say right now is we are seeing some good basis opportunities out there. So if you've got something that you want to move here in May or the first few days of June, I think watch these basis levels, put some offers out there. And I think that'd be the only thing I'd be looking at right now. I wouldn't want to be a seller of old crop or new crop on corn or beans here.
Jeff, appreciate that. Jeff Peterson with Heartland Farm Partners. Kyle Bumsted also joining us as we break down both the grain and livestock markets. This is the weekly market roundup brought to you by Nebraska soybean farmers and their checkoff. We'll see you back here next week.